Hello and welcome to CMS Forex News. I'm market analyst Nick Nassad. Today is Wednesday, August 26, 2009. We begin today's broadcast with the pound-dollar pair, which extended its decline in today's trading, falling from its open near 1.6355 to a low of 1.6160, a 185 pip change. That fell below last week's low and is now the lowest the pound has been against the Greenback since July 13th. The pound has come under increased pressure since GDP figures disappointed, the Bank of England expanded its asset purchase plan, and yields on gilts have slid to multi-year lows. The pound-yen pair, meanwhile, fell below its support at the 153.50 level. We mentioned yesterday how the pair had tested that level 4 times in the previous 7 sessions, and the pair's bears were able to finally breach that area. The pair found support at 152.23, which corresponded to lows from mid-July. The Greenback also gained against the euro in today's trading, following a retest of 1.4350, the third time the euro-dollar pair has done so this week. Failing to climb above that resistance, the pair slid 130 pips to support at 1.42. That level of support was set up in last week's late trading. European stocks were generally lower today, which increased risk aversion and the demand for the Greenback as a safe haven. That came despite stronger than expected German business climate data. US data was also positive, which stalled the pair's decline. Let's delve into today's fundamentals before we show some more market highlights. The German IFO Business Climate Index rose to 90.5, a reading that was better than expected and the highest level since September of 2008. Both the current and expectations indexes improved, with future expectations increasing by a higher degree. In the U.S., demand for long-lasting goods rebounded sharply in July, staging their biggest gain in 2 years on the back of big orders for planes and capital goods. Orders for durable goods rose 4.9%, beating projections of about a 3.3% gain. Transportation-related durables climbed 18.4%, the biggest gain since September of 2006. Also from the U.S., new home sales rose 9.6% in July to an annual pace of 433,000. That figure surprised forecasts on the upside and follows better than expected existing home sales data last week. Together, it can be said that the housing market is picking up, which would go a long way in returning the overall economy to positive growth. One interesting note from the data is that the amount of homes on the market is down 35% from a year ago, and now the inventory to sales ratio is at 7.5 months, the lowest it's been since April 2007. The Greenback rose against the yen in today's trading, but it stayed mainly within its range seen yesterday. The pair has found itself in sideways trading, and the dollar was up against the yen, partly as the dollar has been eclipsing the yen as a funding currency lately for bets in higher yielding assets. That's because the dollar is now officially cheaper to borrow than the traditionally low yielding yen for the first time in more than 16 years. The Aussie-US dollar pair, one that is driven by investor sentiments on growth expectations, fell in today's trading. Investors were concerned about news that China will study limits on industrial overcapacity, increasing concern the global economic recovery will be slow. The Greenback advanced 120 pips as the pair ran up against resistance near 0.8420 this week. There is an upward sloping line of support which stalled today's fall in the pair, so it will be interesting to see if it holds or not to end the week. The US dollar-Canadian dollar pair, meanwhile, extended its gains from yesterday, climbing about 150 pips from its intraday low near 1.0830 to set a high just below 1.10. That runs up against a trend line that had acted as support prior to being broken near the end of last week. In addition to the sense of risk aversion, oil prices slid another 1% today, which pressured the loonie. Tonight, New Zealand will post data on its trade balance, and Australia will release data on business investment. Overnight, Germany releases a report on consumer confidence and another one on consumer prices, while the Eurozone releases data on private lending and its money supply. Tomorrow, the US posts its revised version for second quarter GDP, along with weekly jobless claims. Okay, and that will do it for our daily recap. Thank you for joining us here at CMSFX.com, and happy trading.